Hi, my name is George Pino, and I'm the CEO of Commercial Brokers International. Today I wanted to sit down and talk to you a little bit about not just investments, but rather the mindset of an investor, and more particularly the mindset you should have as an investor to maximize the return on your investment. You know, many times when talking to a investor or holder of real estate, I hear from them, "Oh, I'll never sell this property," and I don't like really to hear such black and white statements because really the reason why any investor bought the property in the first place is really to make money. It's an investment. That's the whole idea of it. So don't just rule out selling the property, and in fact many times selling the property may be your best opportunity to maximize your investment. So what do I mean by this? Well, take for instance a client of ours who purchased a building back, I think it was in close to 1998 or so. They paid $275,000 for a 10-unit apartment building. And overall they thought they were doing really well with the return on their investment. And mainly because now they're netting about close to $70,000 a year. And when you look at those numbers, paying $275,000, netting $70,000 a year, it sounds like some really good numbers, and it sounds like a really good return. But the one thing they're not taking into account is what is the actual true return on the equity of the property, not just what they paid for it, because that property, of course, has gained value over the years. So what do I mean by return on equity? Essentially, the value of the property went from $275,000 to a little bit over $2.5 million for this particular property. And for this property to increase in that value, the return is it's the return on the equity is what the value is worth today. Essentially, it's having that money that you've created that equity for, built up the equity in the property, having it work for you. Now, when you look at it that way, if they were to sell the property for $2.5 million and get a $75,000 net return on that property, really what you're really looking at is about a 3% return. And that's not necessarily that great of a return for a property of that size and that equity. So after sitting down with the client and discussing all the different opportunities and options, we all soon came to the realization that this particular property was not necessarily the best for their investment dollars and what they were trying to achieve, and that there were other opportunities that were available to them. So we went ahead, we listed the property, we ended up selling it. They netted close to $2.5 million. From there, we ended up looking at different opportunities that we could then transfer that property into by utilizing a 1031 exchange, a tax-deferred exchange. And we ended up finding a single tenant triple net property out of state for a little bit over 5 cap, and that had a corporate guarantee and 20-year lease term. That in itself actually increased the net operating income of the property close to about 45% or so. So they actually were able to increase their income from their investment by 45%, more than what they had been getting from the apartment building. Also with less management, hardly any at all, and less worries and headaches. Never a call in the middle of the night for any clogged drains or broken water heaters, things like that. On this particular property, what was of interest as well is that we're actually able to, the property that we acquired at a higher purchase price, close to $3.5 million. And by utilizing the power of leverage, we actually were able to increase the net operating income even more so than that 40%. This is just one of the examples of how we've helped clients take a look at their investment and realize whether or not that investment is actually getting the best return for them and accomplishing the goals that they were trying to achieve with the investment. In some cases, it's not right to sell, that you may be better holding on. In many cases, however, especially in the cyclical nature of real estate, there are many times where one asset class of commercial real estate is down and another is up. For instance, right now, multifamily is very hot market right now, and they can be sold at a much lower cap rate than traditionally the market bears, especially when in relation to retail properties, which are starting to soften up a little bit. So ultimately, what I would recommend as any investor is really to keep an open mind. Keep a mindset where you are understanding what your investment is, what your original investment goals were, what they are today, and whether or not the investment that you have is currently meeting those goals. And if not, are there other opportunities available to you?